Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy, and specifically to talk about what's happening with the Russian ruble. Now, if you follow the channel, you'll know that we've spoken about the ruble a lot. And over the last 20 months, the value of the ruble in the exchange markets has fallen by around 50%. That is a fact. We'll have a look at some data later in the video which shows exactly what's been happening to the exchange rate. So please don't post any messages below saying, what are you talking about? The ruble's doing really well. It's one of the strongest currencies in the world. It isn't. It's doing very badly. And what's interesting about what's happening with the ruble is that the market for the ruble is actually shrinking on an ongoing basis. Less and less countries are interested in using the ruble. So that means that the volume of trading has gone down significantly. But despite that, the value of the ruble continues to fall. And over the last month or so, we've seen another fall in the value. It's now starting to drift back again up towards that trigger value of $1 to 100 rubles that occurred back in October when President Putin decided that enough was enough and he wanted to take action to bring it back in line. And he introduced a whole host of different capital controls, including forcing Russian exporters to firstly transfer 80% of all of their income back to Russia and then convert 90% of all of that revenue into Russian rubles. He was forcing those companies to actually do trades in Russian rubles, even though they were selling their goods in other currencies because the trading partners didn't want to deal in rubles. And the fall in the value of the ruble over the last month or so tells us that there are now serious problems. Something is going wrong with this new system that President Putin has put in place because it isn't maintaining the value of the ruble. So in today's video, we'll have a look at what's going on with the exchange rate between the Russian ruble and the US dollar. We'll also have a look at what's happening with the euro. We'll then look at what's happening with the Yuan from China and the Indian rupee because they're Russia's two main trading partners at the moment. We'll then talk about what's going on with inflation because the movement in the exchange rate has a big influence on the cost of imports and that's pushing up inflation. We'll also have a look at what's going on with interest rates. And then finally today, I'll wrap up with my summary as to what I think is going on right now with the ruble, what this tells us about Russian trade and what's happening in the Russian economy. But before we get started on all of that, once again, I'd like to say thank you so much to everyone that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, I really appreciate that. It genuinely means a lot to me. And if you've signed up as a member or a patron, that's fantastic because you're providing me with long-term support that really helps to keep this channel going. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble for the last 5 years. And the reason I wanted to go back this far is to quickly have a look at what happened at the time of Russia's invasion of Ukraine, and then talk about how much the Russian ruble has deteriorated in value over the last 20 months, because there still seem to be some people watching this channel that don't seem to understand the concept of a fall in the value of a currency. So if we look at what happened immediately following Russia's invasion of Ukraine, the exchange rate fell from around $1 to 77 rubles to $1 to 125 rubles in a very short space of time. And the reason that the value of the ruble crashed at that point was that nobody in the international markets wanted to buy any rubles. Now, President Putin obviously wasn't happy with that situation, and he instructed the Russian central bank to step into the markets and stabilize the currency's value. And actually what you can see is that they overcompensated. And by June the 20th, one US dollar was trading for 50 Russian rubles, which was actually the strongest exchange rate since 2015, after Russia's invasion of Crimea, when the Russian central bank also undertook some support measures to stabilise the value of the currency then. Now, as you can see from the rest of this chart, since June 2022, the ruble has been in a downward trend, and the current exchange rate of one US dollar to 93.6 Russian rubles represents a fall in value over the last 20 months of more than 46%. Now, if we quickly zoom in and have a look at what's happened over the last 12 months, this time last year, one US dollar was trading for around 75 Russian rubles, which means that today's value of 93.6 represents a fall of 20% over the last 12 months. And a fall of 20% in any currency is obviously not good news, But when you're talking about one of the largest economies in the world, who is a major exporter such as Russia, a 20% fall in a 12-month period is a complete disaster. Now, as I mentioned at the start of today's video, in October 2023, President Putin introduced new capital controls, which restricted what Russian exporters were allowed to do with the income that they were earning. He forced all of those companies to repatriate 80% of their overseas earnings back to Russia, and then convert 90% of that income into Russian rubles. And the reason that he did that was because at that point, the exchange rate between the US dollar and the Russian ruble had fallen to less than 1 to 100. And if you look at the trend of the exchange rate between February and October 2023, you can see that there was a sharp decline in the value of the ruble. And if it had continued at that rate, today we would be looking at an exchange rate somewhere in the region of $1 to 150 rubles. So President Putin decided that he needed to step in and stem the fall in the value of the ruble, and by introducing those capital controls on all of Russia's exporters, it meant that there was stable demand for the ruble because all of those companies had to keep buying Russian rubles. They were being forced to do so by the Russian authorities. And as you can see, that brought the exchange rate back down to around $1 to 90 Russian rubles. However, if we now zoom in on what's been happening over the last month, you can see that the decline in the ruble has started again, and the current level of 93.6 represents a fall in value in the last month of around 5%, which is obviously a very worrying trend from Russia's point of view, because if it continues declining at that rate over the next 6 months, then the value of the ruble is likely to drop below 1 to 100 at some point in the near future. This chart shows the exchange rate between the Russian ruble and the euro over the last 5 years. And the reason that I wanted to highlight this is that prior to Russia's invasion of Ukraine, Europe was actually Russia's largest trading partner. A large number of the contracts that Russia had put in place with European countries were agreed in euros, so it was a major trading currency from Russia's point of view. And as you can see from the shape of this chart, it is identical to the chart that we just looked at for the US dollar. And the reason that I wanted to show this was just to prove that this isn't because the US dollar has strengthened in value. Again, some comments that I get whenever I talk about what's happening between the ruble and the dollar is that that's specific to what's happening with the dollar. The dollar is strengthening and Russia is doing well against every other currency in the world. And I think this chart proves that that isn't the situation. What's happening with the ruble is comparable across all of the different currencies, and that basically tells us that the value of the ruble fundamentally is falling. And if we zoom in and have a look at what's happened over the last 12 months, you can see that the ruble has deteriorated in value. This time last year, €1 was trading for around 79 rubles. Today, it's trading for more than 101. And you can see a similar trend to what we just talked about for the dollar. Between February and October, there was a significant devaluation of the ruble. At that point, President Putin stepped in and introduced his capital controls, and that did stabilise the value of the ruble. However, as you can see, since the 22nd of January 2024, there's been another decline in the value of the ruble, and it's fallen by around 5% against the value of the euro. This chart shows the movement in the exchange rate between the Chinese yuan and the Russian ruble over the last 5 years. And as you can see, it has exactly the same profile as what we've just discussed for the US dollar and the euro. And at the low point in June 2022, one Chinese yuan was trading for around 8 rubles. Today, it's trading for around 13.2, which represents a fall in value over the last 20 months of around 39%. So similar to what we've just discussed for the dollar and the euro. And if we zoom in and have a look at what's been happening over the last 12 months, this time last year, one Chinese yuan was trading for 10.9 Russian rubles. And you can see the same profile in terms of the decline in the value of the ruble between February and October 2023. The value then recovered after President Putin introduced the capital controls, which were designed to increase the amount of demand for rubles from Russian exporters. And if we zoom in and have a look at what's happened over the last month, you can see exactly the same trend. This time a month ago, one Chinese yuan was trading for 12.5 rubles. Today, it's trading for 13.2, which represents a fall in value of around 5%. Now, this chart shows the movement in the exchange rate of the Indian rupee to the ruble. And there's an interesting thing to note here, that prior to Russia's invasion of Ukraine, the ruble was actually more valuable than the rupee. And if we look at the situation in June 2022, when the ruble was at its strongest point, when the Russian central bank was supporting the currency, one Indian rupee at that point was worth 0.65 Russian rubles. However, over the last 20 months, the situation has reversed, and the Indian rupee is now stronger than the Russian ruble. And today, one Indian rupee is trading for 1.12 Russian rubles. And you can see we've got exactly the same profile as what we've just looked at for all of the other currencies here. If we zoom in and have a look at what's happened over the last 12 months, this time last year, one Indian rupee was trading for 0.9 Russian rubles. However, you can see the same deterioration in the value of the ruble between February and October 2023. And if we zoom in and have a look at what's happened over the last month, this time a month ago, one Indian rupee was trading for 1.06 Russian rubles. Today, it's trading for 1.12, which represents a fall in value in the last month of more than 5%. So entirely consistent with every single other currency that we've just discussed, which tells us that the value of the ruble is declining. This isn't specific to individual currencies. This is happening across all of them. Now, one of the reasons why the exchange rate of your currency is important is that it has an impact on both the price of your exports and the cost of your imports. Now, from Russia's point of view, if the value of the ruble was falling and everybody was paying in rubles, then that would mean that its exports became relatively cheaper. Because if you're paying in rubles and the value's going down, then obviously you have to pay less of them. However, as I mentioned at the start of today's video, very few countries in the world want to deal in rubles. There has been a huge backlash against doing that since the start of the Ukraine war. And so the fall in the value of the ruble isn't really benefiting Russia in terms of reducing the price of all of its exports because nobody's actually dealing in that currency. So it's not having any major benefit on its exports, but it is having a major impact on the cost of its imports. And that's one of the things that's now driving up inflation in Russia, because as the value of the ruble falls, it means that in relative terms, all of the things that it's buying in the international markets, which it has to pay for in foreign currency, are increasing in price, and this is now driving up inflation. So let's have a look at exactly what's going on with inflation in Russia right now. This chart shows the movement in the official inflation rate in Russia over the last 12 months. And as you can see, this time last year, inflation was running at around 11%. There was then a remarkable reduction in March of 2023 from 11% to 3.5%, which is difficult to explain because at that point, Russia hadn't hiked its interest rates. So there isn't really a good reason why that happened. It then fell again to 2.3% in April. However, as you can see, since April 23, there has been a rapid increase in the rate of inflation. And for the last 3 months, it's been running at around 7.5%. And that compares to Russia's target rate of 4%. So it's almost double where Russia wants it to be. And in terms of putting that into context, this chart shows the current rates of inflation for the G20, which are notionally the 20 largest economies in the world. And as you can see, Argentina and Turkey are completely off the scale. They're 1 and 2 on this list, with a rate of 254% and 65%, both of which are completely unmanageable. But the next highest rate of inflation out of the G20 is Russia at 7.4%. And as we just saw from that chart, the trend in Russia is actually increasing inflation. When we look at all of the other countries in the G20, the vast majority of them have a reducing rate of inflation, because this is one of the key metrics that the central banks in all of these different countries have been trying to target over the last 12 to 18 months. Everybody has been increasing their interest rates to try to reduce spending, reduce demand, and therefore bring prices down. But in Russia, we've got a different trend. Inflation has been rising, and it's now a persistent problem. And one of the reasons for that is because of the fall in the value of the ruble, making the cost of all of their imports more expensive. And if we have a look at what's been happening with interest rates in Russia over the last 12 months, you can see that there's been a rapid increase. This time last year, the official rate of interest was 7.5%. However, since the autumn of 23, the Russian central bank has introduced a number of interest rate increases, and the current rate of 16% is one of the highest in the G20. Not surprisingly, given the inflation data we've just looked at, Argentina has the highest official interest rate at 100%, Turkey has the next highest at 45%, but Russia's rate of 16% is significantly higher than all of the other countries in the G20. And when you compare it to the likes of the United States, which is 5.5%, the United Kingdom at 5.25%, Canada at 5%, and the Euro area at 4.5%, it is significantly higher. And one of the main reasons for that is because of the fall in the value of the ruble. And of course, having very high rates of interest is detrimental to the growth of your economy because it makes borrowing very expensive. And so companies and individuals become more cautious, they tend to take on less debt, and that generally leads to a contraction in spending and therefore a reduction in your GDP. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with the value of the Russian ruble is really interesting because it's telling us what's actually going on in the Russian economy. Russia doesn't release a lot of data, and interestingly, by this point in the month, I usually publish one of my videos talking about the official results that have been published by the Ministry of Finance in Russia. They usually come out on around the 14th or the 15th each month. But in February 2024, they haven't released that data yet. And I don't know whether that's because there's been some changes in terms of the way they're publishing that data, or because that data simply doesn't look very good for this month and Russia doesn't want to share it. We'll have to wait and see whether or not it's ever published. But what's going on with the value of the ruble is quite fascinating because President Putin has had this on his list of things to make sure it stays within a certain range. And when we saw the value of the ruble falling below $1 to 100 rubles in October 23, he decided that that was just too much to cope with and told the central bank to do something about it. And they introduced all of these capital restrictions, which told all of the exporters that they needed to bring most of their income back into Russia and convert that income into Russian rubles. And that created artificial demand for the Russian ruble because those companies wouldn't have done that by choice. And as a result of that, we saw a stabilization in the value of the ruble over the next 5 or 6 months. However, what we've seen over the last month or so is that that's now started to drift, and the value of the ruble has fallen by more than 5% against every major currency in the world. It's not just about the dollar. We're not just talking about the US dollar strengthening for specific reasons against the ruble. We're talking about the ruble deteriorating in value against all currencies. And I think there are probably a couple of explanations here. Firstly, the value of the ruble may be falling as a result of just a general deterioration in the exports that Russia are achieving right now. There may be reduced demand for its goods. I reported recently that India have started to cut back on the amount of oil that they're buying. So Russia may be experiencing shortfalls in terms of its revenues. Or it's also possible that these companies within Russia are finding ways of not moving all of that money back to Russia. They're doing business in a different way, which means that they're not having to repatriate all of their income and then convert it into rubles, which is leading to a reduction in the demand for ruble and therefore a deterioration in the value. The value has fallen by almost 50% over the last 20 months. And in the last month alone, we've seen a further devaluation of 5%. So something is going wrong in the Russian economy right now, which is leading to a fall in the value of the ruble. And if this continues, we may well see more cracks starting to appear in terms of the external facade because we don't have the real details. We don't know exactly what's going on in the Russian economy. But what we can see from the externally available data is that things have started to go south from Russia's point of view. The value of the ruble is now falling again. It may well get down to that 1 to 100 level once more. And it'll be interesting to see what President Putin does. And there aren't that many other options available to him to control the value of the currency. So the overall summary of today's video is that over the last 20 months, we've seen a significant devaluation of the ruble, around 50%. In the last month alone, we've seen a 5% deterioration. And if that trend continues, we may well see the value of the ruble falling to its lowest level ever. and that tells us that there are serious problems going on right now in the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.